Hello. Today we're going to speak in English, and I have a very beautiful and very professional my other side for this talk, and she will introduce herself. For me, not to spoil with the wrong pronunciation, this beautiful name, and we talk about the investments, companies, mergers and acquisitions, and private equity in the Baltics.
Okay, so I'm Deimante Korsakaite. I am the executive partner of one of the leading Baltics private equity funds, INVL Baltic Growth Fund. And the fund is managed by one of the largest asset management groups, Invalda INVL, which is worth saying that as a private company, it is managing over 1.5 billion euros of assets that was entrusted by over 250,000 people. And it boasts over 30 years of experience of investing in private equity assets and managing them, and actually has made a few really big regional leaders. And currently, as Invalda, we're suggesting a number of products and assets for our clients to invest in, it being a number of alternative assets like real estate, forest, agricultural land, renewables, private debt, obviously private equity, and as well even pension funds and life insurance. And INVL Baltic Growth Fund was established as a successor on decades of Invalda INVL experience of investing in the private equity assets. And its aim is to make a diversified portfolio of a number of companies in the growing markets, looking for those companies that can really compete on the global level. And we are investing like 10 to 30 million euros in one portfolio investment. And we are really looking for those companies to really grow and become the leaders in the region. And not only in the region, because geographically we look into the Baltic states, as well as around the Baltics. I mean, Poland, Nordics, as well Germany, because it's like close to the Baltic Sea, and I would say opportunistically anywhere in the European Union.
So Invalda is outside the banking sector actually one of the biggest or the biggest player effectively in that asset management. You could say that. Yes. Okay, that encompassing all of you, what are you doing? And you have been doing it almost for a generation now,
since 1991.
Yeah. So basically, just after we regained the independence. So, but and you have been present as well in Latvia, and of course, we're mostly talking here. Although I mean, we're talking to the world, but for the Latvian entrepreneurs and managers and people who think and want to do something about the business. So what is changing, or kind of like or direction? Because you were more with the asset management, for the selling the funds, but now you are more in private equity here.
Yes.
So tell us about more about that.
It is actually, as I mentioned, the private equity was the basis of Invalda, and then going to this traditional asset management where you are just offering different funds to the clients, it came later. But since the very beginning, we're investing in the private companies, working with those companies, developing those companies, and then selling. The main difference was that previously it was investment from the balance sheet, which, the balance sheet has its limits. And when you need to do a huge expansion, it's every time deal by deal, you need to be looking for the co-investors. What do we have now is this committed capital of 165 million euros. That's committed by our investors. It's institutionals, high net worths, corporates from all over the Baltics. And this capital is for buying those companies, and it's readily available based on our decision. And we're just investing, looking for the good companies to invest in, and those that have actually a potential, where we see the actual potential to grow the companies.
Mm-hmm. So you have dry powder of 165 million more.
Dry powder is 100 million.
Okay, and let's say as you're doing it all over the Baltics and even outside the region somewhat, and you said that 10 to 30 million is the sweet spot where you would like to invest.
20 million euros, I would say, is the sweet spot. But we can definitely start from a smaller ticket, and that's already been the case. Let's say it is a growing industry, and the industry has low consolidation. And we see a platform company where we can invest in, and from that company to start the consolidation of the industry, in which case it's more not investing into one single company, but it's investing in the theme of the consolidation of a certain industry. So then we start from a smaller ticket, but we know that we will go up close to our sweet spot by consolidating and buying the other companies.
Okay, so if it's okay, maybe we can zoom in a little bit and just, I guess you have studied and looked at the market and see the industries, and maybe we can let know the people that you are out there. What do you prefer? What are the industries you kind of like see that there is this potential for the deals, and where you would like to be?
I would outline one important thing, that we are industry agnostic, which means we are not discounting any industry unless the industry doesn't pass our ECG test, which is, well, we cannot invest into the weapons or into the gaming or into the alcohol, etc. There are some others. Or it happens when an industry has like a general negative aspect. But overall, into any industry we do look at, and we look into any good companies. If to mention a few industries where the private equity radar looks, so I would say it's the healthcare, it's the e-commerce, it's the industrials, any manufacturing, any B2B businesses, recycling, environmental services, this closed loop related industries and services. As well, definitely IT technologies. We start looking into it now as INVL Baltics Agro Fund. So far, we do not have investments into like really technologies industry, food processing industries, just to name a few. And if to like give a definition what private equity and us and investors does, so they're analyzing the industries. They're looking for the future prospects of the industries. And in general, there are like few criteria for the industry. So either due to some macro trends, you see that the industry will be growing, for example, senior care, or the industry has low penetration. So it's some new industry and there's just few players. Or the industry has low consolidation, like it's really fragmented, and it's an example of what was in Lithuania, at least still a few years ago. Not sure how it's in Latvia with this healthcare. Or you can see that the consumer behavior is changing, and you see the ability to leverage on the change of this consumer behavior. Could be technology driven, but so far we haven't looked at such industries. So that's just to name a few. And in general, I have this saying, like for maybe not too much professionals, but for founders or entrepreneurs who have their businesses and they are looking for the growth. So if you have a company, a manufacturing company, and you need a capacity expansion, so you can go to the bank, but maybe the bank is not willing to finance you. So this is where we can come in. Or you have an idea of expanding cross-border, and you want to do an acquisition, acquire your competitor, but you've never done an M&A transaction in your life, and it requires a very specific skills to do this transaction. So you can come to us, and we'll sit at the table and we'll agree on our equity investment, and we will come in to assist and acquire the competitor.
So you're ready to help and looking for the moment when the company is going to move on, or for some change, or either in ownership or in the markets or anything else?
Anything. It can be even problems in between the current shareholders. So we do complex transactions where you need a lot of patience. And sometimes this is as well where the value lies for both parties. For us, who can acquire a good company that's currently struggling just because, let's say, of a conflict of shareholders. And it's for the shareholders that finally solve their conflict because they just split the capital. They get capital from us because we do the buyout. So a number of themes there can be for the acquisition: growth, generation change, some financial difficulties maybe, but you need equity, as well as I mentioned, maybe problems between the owners. Or a management team. Let's say a management team has an idea of buying out the current company that they are in. We can back a management team, or a management team with an experience already in the industry, and they have an idea of buying a company. Let's say they know somebody wants to exit, and they are ready to step in as managers, but they need somebody to back them. So we can back managers.
Okay, I think this is a very good channel to let know of your activity and fund size and so on. But besides that, do you keep a kind of a team or some team member here, or you work with the people like us who do the M&A in the market and work with the clients, or how it's organized?
We do have one member here already, but we employed only this year. And it's a new team member, and he's like a bit more junior. So I would say that in terms of the partners level, so we are based only in Vilnius, and we work from Vilnius. But definitely in terms of the sourcing of the deals and getting the ideas, we definitely work with someone like you, with people who come up with the ideas. And as well, since we already have portfolio companies here, so as well it comes through managers. So
word of mouth.
Yes, word of mouth and the overall network, I would say.
Mm-hmm. Do you intend to offer locally as well some the possibility to invest in your fund, some fund shares or something in Latvia for the investors or something like that? Or no, the fund has been raised and closed.
Yes, the fund has been raised. Closed. We offered this fund to a number of institutionals, corporates, and high net worth individuals. It's been closed, and once we deploy up to 80% of our capital, and the dry powder just goes down, we can raise a successor fund. So once the successor fund is being raised, then it will be again offered, and it is offered to Lithuanians, to Latvians, Estonians, and to all the Europeans.
Okay. So that then happens with a different part of Invalda, or through the other sales channels, or how?
Talking about the high net worths, it happens through the arm, which is wealth management of Invalda.
So it's a wealth management part.
Yes.
Okay, I think we very effectively and efficiently in a short covered a lot of ground. So we can maybe even more than talk. But have you made any investment in Latvia? You said you have the portfolio companies already here.
Yes. Yeah. Yes.
So we can talk about then the differences in culture, or what you can talk about, because certainly there is some difference in the corporate culture in Lithuania, I guess, in Latvia and Estonia for that matter.
I wouldn't escalate any significant or even subtle differences in the culture. We have portfolio companies in Lithuania, in Latvia, in Denmark. Okay, maybe it's not fair to say Denmark because it's only headquarters, so manufacturing sites are in Poland and in China. So there are of course cultural differences, but they are not significant. But I think the main thing why we work successfully with the managers from the different countries is we know one thing. We know how to be, and that we are a very good professional owner. But we know that we are not operational manager, and we don't know how to do the operational stuff. We are the owner, a professional owner. And a good professional owner who knows that he needs just to be an owner and to perform like an owner, and a good operational manager's tandem, I would say, is unbeatable. And we know what each other's job is, and we do not interfere into each other's job. And I would say that this is the way to overcome any cultural differences. And I would assume that the management of Ecobaltia, because we are the controlling shareholder of Ecobaltia, of the whole group, would really confirm this, because We came in June 2020, at the end of June, and we haven't changed the management. We found the successful ways to actually work together, being them at what they are best, and providing the assistance and the know-how, the additional know-how that we have, because we know where to look at, how to look at it, and where to direct people. I can only say that we are so proud seeing how the company is growing, because we entered the company of 75 million euros. Now we have a company of roughly 440 million euros.
Beautiful growth, and everyone would like to see. So you are opportunistic, you are industry agnostic, and you are a good professional owner, kind of like
yes.
the main points, I would say. Yeah?
And we do not invest in businesses that we do not understand. That's as well a very important
point. So you
point.
Looked into the Warren Buffett rule book.
You can say so. You can say so.
Okay, but that's only the common sense, which is not so common as it So yeah, but nevertheless, maybe getting a bit back to the previous question I had not is that still you have your junior partner here, but what is the role you overall see the other players and financial intermediaries like investment bankers and banking boutiques and banks to help you source and maybe work on these deals or raise some additional capital or whatever, or you do that all that in-house?
Okay, so I would comment like this. So one thing for an investment banker to work for a private equity on a buy side, it's rare. But same way, it's extremely rare not to have an investment banker, financial intermediary in the exit mode. So that's always what the investment bankers do for private equity. It's help to exit, help to maximize the value from the exit. Another important role of the investment bankers that I would outline is when you have a portfolio company, and definitely it's public what we have. And investment bankers really often do a good job of just coming up with the add-on opportunities. And once they come with the add-on opportunities, they usually get their engagement from the sell side. So they somehow connect these two sides, us and the sellers. And the last but not the least, and I would say one of the most important roles of the financial intermediaries is when they're working on the sell side, especially when they're working not for professional investors, let's say like we are, but more for founders, entrepreneurs. Maybe for some it's the first and maybe the only deal that they are doing in their lives. So the experience and know-how of M&A deal, it's completely different between the professional investor and that founder. So the financial intermediaries really work as an amazing bridge of explaining to the founders like the rules of the game and how it's been done and why somewhere the risk exists and why somewhere the risk doesn't exist. Because sometimes you can just be afraid of a mice running around the room, but actually it doesn't, there's no threat coming.
So it's more value added for the investment bankers to help the sell side to maximize the fees and do the hand holding for the owners and less experience with probably their largest investment of lifetime and what they have spent years or tens of years creating. Okay. What about, nevertheless, you said you're a good owner, but still, you as a good owner, you do some changes in the management, and what do you see that are at least locally or regionally in the Baltics, we're seeing mixed management teams with different representatives from Lithuania, Estonia, Latvia working together, maybe other countries. Or it's still predominantly the local people know and do it best?
Predominantly, I would say nobody does better than a local person who speaks local language, who knows local particularities. But there is important side to comment on is how we form those management teams. And we are looking at the experiences and the knowledge that is required for the operational value creation and growth plan that was set for the company. And I'm not saying we're best at doing that, but we really aim to very tightly link our value creation plan and strategy to talent and management team, because having a tight link between these two really allows to A, accelerate this value creation, and B, to mitigate the risks of investment.
And in this way to add value. And you have a kind of like, you agree on the roadmap, and then the ones who are the best at executing it and getting to the goalposts, so to say,
yes.
Of course, in a way win.
Yes, and we align our interests with them. Because as a rule, we never come in and say, okay, this is your fixed salary, this is your annual bonus, based on some usual rules. But we try to align our interests with them in terms of, so they know where we are going, they know where they have to take the company, and it can be option schemes, option programs, so that the motivational program is based on our exit, on the value that's been created during the holding period, which I think gives a very good aligning of interests. So it works well for the company, because the company is growing, it works well for us, and it works well for management.
Maybe we then could talk a little bit about the environment in a sense. Okay, and I understand that you invest try to invest in good companies, in industries which you are ready to invest, but at the same time you are opportunistic. But of course, and then you don't invest if you don't know enough about the business and don't understand it. But nevertheless, what then predominates? Are you looking as well at the macro trends, or of course you are, but what drives more, the micro situation, the opportunity, or you overall try to not to get against the wind, and then where the wind is in our backs, then you try to invest in those industries, and then we can get and talk about the Baltic economies.
It is the best when you can guess where the winds will be blowing, but that's not always. So sometimes we get lucky, maybe even, and then you just find yourself having invested where you're having really good winds blowing into your tail. But I would say it's both. We are, of course, analyzing macro trends, and we are upcoming with the themes where we would be, where we would like to be looking into and to be analyzing, and then you granulate. So you say, okay, so what are the companies, let's say in Baltics in this industry? Okay, you list down the companies. The countries are small. I mean, you can get the lists of largest 1,000 companies in Lithuania, Latvia, Estonia, and you can just analyze each and every company. So you look at those companies, and then you can see, okay, this is no-go, this is no-go, and then, okay, there might be something. Let's talk to those 3 or 4 or 5 companies. The other way is simply you get a suggestion, a teaser from the investment bankers. So that's the really big role of investment bankers, which they play. They're just helping the sellers to sell, and the sellers, they can be just simply willing to exit, as I mentioned, because of the generation change. There can be problems between the shareholders, or they need a growth capital. And then you start analyzing the industry. Because, okay, maybe it's a good opportunity. Industry, is it interesting or not? Okay, it's potentially interesting. Let's analyze it. And then you again go from macro to a bit more granulated analysis of the company itself.
Very good. You're putting it very clearly, I think, for anyone who has not even been involved in the process. But then, let's say now try to zoom out a little bit again and look at the Baltics and the Baltic economies and as a part of the European economies, and where do you see where we are going? The year is still relatively young. And of course, unfortunately, what's happening right now in Ukraine at the moment, where we are creates some extra uncertainty. But we're not going to put words in your mouth. So, well, how you see that? How your company see that situation in the Baltics in economy, where we're going, and what could we talk about the possible impacts and so on?
Just a week ago, let's start from just a week ago, the sentiment was really positive. So 2021 was booming in M&A market, and apart from geopolitical tensions that were already there, and in general the questionable situation and disturbances in the market because of COVID, you never know what's coming, what new variant is coming, how it's going to affect the markets. But apart from this, where you had to be always alert, we consider that the sentiment is positive. We didn't see reasons why the companies wouldn't be growing, and the outlook was that the growth will continue for a few years ongoing. And the sentiment was that in this year, let's say the same M&A market is either going to be even increasing comparing to last year, or at least stay the same. But there are few reasons for that, why we looked at the market and we consider that the growth will continue. So there's a good cash supply, because the year 2021 was really good for most of the companies, so they have generated really generous cash supply. There is a large availability of capital in the market. So it's currently where we are in terms of the Baltics and the private equity. So that's the first time in the history where 3 Baltic managers, they have private equity funds, roughly the same vintage, and all of them are above 150 million euros. That's already a huge cash supply for Baltics. The size of VC funds, so this earlier stage, is as well growing. So back in the days, it's like 10, 5 million. Now they're going above 20 and 30 and etc. And what we saw that the strategics were always interested in the Baltics, but not too much the private equity from outside the region. Now private equity from outside the region started looking for the investments in the Baltics. And at least from what I heard, even the investment bankers, they were trying back in the days to send the teasers, but they were not getting any responses. Now the funds themselves, the managers, are calling to the investment bankers in the Baltics and saying, hey, don't forget us. We want to get the teasers. So that's increasing the availability of capital in the Baltics. Then the technology changed, and all this shift to this digitalization and efficiencies and ECG and anything that might require the growth. And in general, the positive market sentiment itself, before a week ago, we were all over the moon, that everything will continue growing. But obviously, now in this week's situation and what happened just a week ago, it is not clear what is going to happen. It's really tough to say now. We live in unprecedented times, COVID and war, and you really have to be alert, stay alert. You have to adapt at an exceptionally fast pace. It's never been like this. And companies, our portfolio companies, of course, as well, are still in the assessment stage, assessing the risks and assessing the potential impact that's coming from. Nobody knows whether there's going to be an economic avalanche or not, but we already see the rising commodity prices and the gas and etc. So it is hard to say what's going to happen, but I believe that there might be a pause for now, at least when some way or another the circumstances or the events will roll out. Mm-hmm.
So let's hope that our portfolio company is going to be anti-fragile ones.
Let's go. Let's go there.
Yeah, who can handle these difficult times, and still you'll be looking for the new ones, and now you have additional information and part of the picture to test and think about your investments.
It's true. We really, to send the positive sentiment as well to everyone who listens to us, is we do not see any reason to stop our investment activity. And we, as a fund, as a manager, as Invalda, we think, Invalda INVL, we think that the best thing that we all can do is to be calm and to do best what we are best at, continue working.
And what's then, if we look at the INVL, is the ambition? You said right now you're one of the three largest players in this private equity landscape. So to say, with the funds of roughly the same size at the same vintage. But going ahead of that, you of course you see yourself where in this and your growth.
We see ourselves like double the current size. And yes, we will be raising a successor fund. That's a next generation fund after this one, when this one is close to fully deployed. And it depends definitely on how the pipeline materializes and how quickly we finalize the deal that we are currently working on. But we will make sure we do not stay without the capital. So as soon as the visibility of deploying majority of the fund comes, we will go out into the market with our successor fund, which is going to be much larger than this one.
And the investors, still the usual suspects, like the
European investment
banks,
funds,
and so on, or more private and I don't know, fund of funds and the players which are I think more typical in the rest of the Europe private equity landscape.
It's an interesting theme that you touched upon, and this theme has been already for a number of years around, because private equity is kind of a closed club, available, for those institutionals, large ones, the professional investors, and mostly was closed to those qualified investors, which is as well a bit of a question why, because the qualified investor, for those who doesn't know, it's a person who can commit 125,000 euros at least, which means a person already understands the risks, and you have to have enough liquidity and savings to be able to lock this amount for 5, 6, sometimes 8 years. And definitely it was closed for the retail investors. But when we were raising our first fund, we already opened this asset class to the qualified investors. And actually the interest was huge. There was over 150 investors that committed over 60 million euros. And the rest is, of course, institutionals and corporates. And we stepped ahead now, and we have established INVL Alternative Asset Fund. I'm not sure if I'm saying the whole name correct, but the idea is about the Alternative Assets Fund. And this fund is open for retail investors. You can invest starting 5,000 euros. Yes, you lock your capital for a few years, but it's already open for retail investors, because this fund will be investing. It's like fund of funds that's going to be investing only in another private equity or alternative assets funds.
Well, it's going to be quoted as well, or what? No.
No, it's not going to be quoted. So far, it is privately raised. But talking about the quoted, so yes, the giants, like global giants, for like how retail investors can get exposure to the private equity. So globally, such giants as Blackstone, they are quoted. So you have shares, and that's it. INVL itself is quoted. You can buy shares.
I think EastCap already had a few years back as well some vehicle, which they quoted in Stockholm, I guess, doing the private equity investments, if I'm not mistaken. But anyway, okay. So percentage-wise, then the qualified investors or the grown-ups who got hold of 125,000 and should be able to take care of themselves and their investments. How big is that part? I mean, percentage-wise. So the institutions and the qualified investors, which are not institutions, roughly. I mean, just the indication.
So 40%.
Oh, that's, I think
35, 40%. I can't tell.
It's very impressive.
I'm very bad at calculating by heart. So 60 million roughly is from
165.
From 165.
Okay, yeah, so, okay, yeah, it's like...
No, it's
like,
1/3.
Yeah, I guess 40.
More 1/3.
I guess even 40,
yes, 30,
yeah, probably.
Yeah, 35, 40.
Yeah. Okay.
Which is a lot.
Yeah, I think that's very, and what it reflects actually is that how many entrepreneurs have made money and have some money on the side. Of course, at the low interest rate environment, you looking for yield, and if you have the money as well, you're ready to put some money aside for longer time to have this higher yield and maybe see additional opportunities.
And because all this investment is a long term, and that's a long-term investment that can provide you financial security for the future. Of course, you have to understand there will be bumps along the road. You're not going to have some straight arrow only up. There are disturbances in the markets, the valuations of the companies going up and down. Let's say COVID hit, it's like 30% of the value of the portfolio companies, but they recovered. So it's the same as with the listed markets. Like, you shouldn't be scared and just quickly liquidate your positions. The good point here is you cannot liquidate. So you just have to sit tight and wait until the manager, who's professional and knows when to exit and what to do, will professionally manage your money and just give you your return.
Yeah, I think there's a disclaimer here that continuous growth and improvement is only in the salesman's pitches, but reality requires some nerve.
Reality requires, yes.
and ability to give time for the investments to ripen, so to say. But okay, but time frame is for you as well is 10 plus 1 plus 1, I guess.
Yes, 10 plus 1 plus 1.
This is
exactly.
the standard, more or less.
Yes, it's standard. It's absolutely standard.
Okay, very good. So maybe there's something else we have missed to ask, and would you like to kind of like pinpoint and clearly make sure for our listeners for the involved investments, private equity investments you plan here?
I think we discussed a lot, really a lot about the market and about the companies. I would just urge. Maybe this Invalda INVL brand somehow is not too much known in the Latvian markets. I think we're much more known in Lithuania than in Latvia. So just know that we exist. Talk to people from the portfolio companies that we have about how we work, who we are, and how the cooperation with us is ongoing. Because I am more than sure you will get only the best comments. And if you really need capital for growth, or you want to exit or diversify somehow your portfolio, or you're a management team, so just pick up the phone or just drop us an email. And I don't know, we can talk a bit if it's interesting on how we help the founders.
Yeah, I think that's a very important point.
Like, why to go to the private equity. And so there are a few points I would say that one thing is as I mentioned, wealth diversification. For a number of those founders and entrepreneurs, their portfolio, their company, it's not a portfolio, their company, their business that they have is like 90% of their wealth.
Or their wealth is concentrated
and
in
it's concentrated, and it's really scary how they concentrated wealth, because anything goes wrong, your whole life is gone. So first, it gives diversification for you. You don't need to exit 100%, and that's what we usually tend to have is founders staying with us together. And the percentages, of course, vary on the agreement, but we want them to stay together. We bring the talent development, so because with all the huge and big deal of respect that we have for founders and entrepreneurs who develop their companies from scratch, from nothing. But once the company is growing, you can really fail, or not fail maybe, but stagnate if you do not invest in and do not hire a management who is capable of running the large corporations, the growing ones, because it brings in a completely different set of complexities and challenges that the growth is bringing in. The business building itself and the financial sophistication that can be brought to your company by the private equity, because as I mentioned, we know where to look at and how to direct. And we really urge and allow companies, they teach them to embrace the best practice in systems, in processes. We really urge them to make bold decisions in terms of the growth and expansions. And sometimes you just need that little push that the new owner can bring in. And because the financial sophistication, so what we usually see, it's the underdeveloped financial departments. And bringing in the best practices of reporting, allowing more strategic and very granular reporting, again, allows you to find the new value creation, the new value drivers, which you couldn't see when you didn't have a very granulated information.
But as well, the different point of view.
And a different point of view.
Yeah, fresh look.
Fresh look,
and which,
yes.
which could probably bring out some further efficiencies or possibilities to develop.
Yes, or possibilities to develop, because before the investing, that's what we do is we look into the company and we try first to establish what are the key value drivers, and then to focus on those that actually move the needle, because you can just go mad if you will try to do all the possible projects. You need to actually focus. So that's as well the focus that you bring into the new company. Of course, the capital for the organic growth. And last but not the least, and maybe one of the most important things for those founders and entrepreneurs, is that you get 2 bites of the same apple. So the first bite is when we are coming in, and we are coming in with a new capital, and of course you liquidate part of your shares, you sell them to us, and since we are asking founders usually to stay with like 10-30%, I mean percentages vary, it's just not the controlling stake, because we are coming in with the controlling stakes, and but of course not necessarily. And then the second apple, once we grow the company together and we increase the value, the founder gets the second bite of still the same apple, which sometimes it's even larger than the first one.
Yeah. So you already taken out some of the money, and you can do it with whatever you always wanted. And at the same time, the other part keeps growing most likely as you help to pick the low-hanging fruit from the financial efficiencies, and as well the management information system, and maybe some additional angles to develop the business. So, of course, the business like yours, they always want to be the only buyer and the only negotiation partner for the company owner who is selling this company, or so on. But as we know from the company's perspective, the competition always is good. But certainly, you are the player which has been maybe less present in the market, which means that for the entrepreneurs and company owners and businesses in Latvia, there is a new player, big, serious, significant, and experienced player, which is maybe more diligent and less arrogant than the existing players, and who with an investment experience which can help for the investors. And let's hope that God will help us, and we'll be able to continue developing the business, not doing the fighting. So anything else? I think we had an extremely valuable and a very informative discussion and talk. As you professionally all did laid out, is there nothing else? We can tell goodbye to our viewers and listeners, and I think there is a lot of information in this, and it's extremely helpful. So Deimante and the involved in the private equity fund, opportunistic for all the investments in industries they can invest, and ready to add value and capital for your company.
Definitely. Most importantly, we are ready to create the real value in your companies together with you.
Thank you.
Thank you.